On this episode of Industry Relations, Rob and I talk about low inventory and interest rate lock-in. Let's go.
This is Industry Relations, a podcast that's at the intersection of real estate and technology from an insider's perspective, with Rob Hahn and Greg Robertson. Hi, everybody. This is Greg, and I'm really happy to announce that we have a new sponsor for Industry Relations, and that company is Zenlist. I've been tracking these guys a while. It's a great new mobile application. You can do search, tour scheduling, chat, client collaboration, listing input, all from any mobile device. These guys are pretty cool. They've got about 100,000 agents across the United States. So please visit zenlist.com to schedule a demo. So if you're an MLS exec, you got to check this out. Visit zenlist.com to schedule a demo. And once again, my thanks goes out to Zenlist for sponsoring Industry Relations.
Hello, everybody, and welcome back to Industry Relations with Rob and Greg. This is your co-host, the Notorious Rob Hahn. And as always, with me is the fabulous Greg Robertson. Woo! Looking very British. No, where's your kilt, dude? I mean, you look tan, which I wouldn't expect from a trip to the Emerald Isles there. But,
yeah. Hola, man. I just got back on 2 days ago, late Saturday night. And we spent, for those who don't know, I was in the UK. So we had... It was a long trip. We were, 14 days. So 6 days in London and did the whole tours of that thing. We did a walking tour in London, which is pretty cool. We actually got on and saw one day at Wimbledon, which was really great experience. They have a whole program where you can skip. There's a lottery to buy tickets, and then I think there's an aftermarket that they can give scalp. But there's another thing where you can join what they call the queue, which is not what the queue means here in the U.S.
Yeah,
it's where you can stand in line and get good tickets, right? So me and my son and my brother-in-law went out there and early that morning, Monday morning, and basically stood in line for about 6 hours and got tickets, really great seats for court number one.
Wow.
And saw 3 great matches. And that was, it was awesome.
Wow.
We got inside the whole thing and had the strawberries and cream and a few pints. Nice. And it was spectacular.
So Greg, when you joined this queue, did you have to give them your name, your identification?
No, when we got there, they just handed us a ticket with a number on it.
So when you joined the queue, you're anonymous.
Right.
So it's kind of a QAnon type situation.
Oh, I'm the one that tells the jokes here, buddy.
And that's a terrible one. So
Yeah, like I said, it's not Q, it's QUEUE, right? So.
But it's spelled Q. I mean, it's pronounced Q. That's awesome. That's awesome.
And then we went for 6 days in Scotland, which was great.
Oh, that's awesome. Yeah.
And did that. So, still a little bit jet lagged, but I'm happy to be here.
And diving right back into the world of real estate in the United States, did you do any real estate related stuff in the UK? Look at any of the
all I did was look at some of the outdoor, outside of the windows at different things. I didn't meet any real estate agents while I was there. We had my kids. It was again, I needed a vacation from my vacation. We were doing so much shit.
Of course.
It was crazy.
Of course.
Yeah.
I've always felt that going on vacation with your kids is not really a vacation. It's more of a, educational tour
not
for
all,
that benefit, So, but welcome back. Welcome back.
Thank you.
Great to have you. So I thought, because we hadn't really had a chance to prep, with you being on the road and there's a lot of stuff going on. But there's one topic I thought is worth touching on, which is, at this point, I feel like the entire world has woken up to the fact that the housing prices are not really coming down, but it's because inventory is so short and the number of transactions here are going to be ridiculously low, right? So the expectation is, of course, when you have lower demand and lower inventory, because that's what Redfin said, right? So buyer demand is all-time lows, but buyer inventory is at lower still, right?
Yeah.
So that's why prices really haven't come down. Our friend Keith Robinson at Next Home, I saw a video that he did on LinkedIn talking about kind of around this topic, and he addressed a very particular phenomenon. I just thought we'd chat about it and get your take. The phenomenon is interest rate lock, right?
Right.
And there's been a number of studies that are out saying something like 70-80% of people have mortgage rates that are below 6%. And
or like
a lot
below 5% or 4%.
below 5%.
Yeah.
There's something like 40 or 50% of people have below 3%.
Yeah.
Right. And the point is, rates now are like north of 7%. Like, they're not selling. They're not selling. And Keith was pointing out, look, that might be true, but a lot of them have enormous amounts of equity. A lot of these people who are homeowners, they're sitting on maybe 3%, 4.5%, rates, but they've got $200,000, $300,000 of equity because home price has gone up so much, and they could move up if they wanted to, right? So, the point is, go talk to those sellers, point out how they could move up, and yada yada.
Yeah, that sounds like.
What do you think?
Yeah. So two things. And I saw you comment that it's on Twitter, and I wrote a little quick post about it of Zillow's recent a chart that I think Fortune Magazine put together about the appreciative homes since 2020.
Yeah.
And you're talking about, some markets, like when it was 53% from the price of home went up from 2020 to now.
Yeah.
Some 35, some 19, right? I mean, that's just incredible. And I think your comment was like, who's gotten a raise, a 20% raise or a 50% raise since 2020? And the answer obviously is nobody.
That's right.
But that goes to speak to your equity kind of thing there. No, it sounds like that's like, again, maybe because I'm a vendor and I make CMA software, I'm a hammer, everything looks like a nail, but that's a chart that, somebody should make of like, if I'm an agent for Express, well, yeah, you have a 3.5% mortgage rate right now, but let's look at your equity. And if we apply that equity down on the next thing, that's going to bring it to this. And over the long run, this is going to happen. Right. So I think somebody should do the math and then do a data viz of that and see if that works out. I'm not sure if that's going to work out. God, if you got a rate below 3.5%, you still have a lot of, that's still a lot that you have to make up for. But that is something definitely to look at. But again, I think it's going to have to go back to, you got to, what do they say? Date the rate, marry the house, right? I can't see now what I'm hearing. The thing is like, okay, well, we've had 10 months of the interest rate inflation going down. It was as high as 11 or something, and it's now down to 3 or whatever. And we've had 10 consecutive months of that going down. Well, we're going to get back to interest rates that are 4 or 5%, or 3 or 4%. That's the other myth that I see is starting to percolate, right? Like the myth before was like the housing prices are going to go way down. That's obviously not happened. And now it's like, well, are people going to still think that those interest rates are going to go back down to 4% or 3%? I don't think that's ever going to happen in our lifetime ever again.
Probably not.
So I don't know if this. I guess somebody has to do the math and show me in a data viz chart what does that mean? Does the having as much equity really, if you're going to go buy another house, really help you, or are they talking about a lifestyle change where you go to rent and now you're sitting on a nest egg of $300,000 that you can start a business with, or can start the planning of putting in the market to restart a retirement? Is that the narrative there? I'm not sure exactly. I didn't see the LinkedIn video, so I'm not exactly sure what he's saying there.
Right. No, he was making an interesting point. He was making a good point. I agree with Keith on most of it. The point I want to make with that, though, I started working on a piece and I said, I don't know if this is, but I figured you and I would discuss it. And so let me state the conclusion, then I'll try and kind of tell you how I got there, right? The conclusion for me is I think what this does is the Fed raising rates so dramatically, so fast. It wasn't even the amount, it was the speed, right? I think what it's done is I think it's wiped out marginal buyers and marginal sellers. So here's what I mean by marginal, right? So if you have a serious life change, right? And the example would be like divorce. You get divorced.
Well, the 4Ds we talked about, right?
The 4Ds,
Yeah.
right? Or you die. Obviously, that's a lifestyle change. But you know what I mean? Like, some serious, significant life change. You're like,
Well,
I
diplomas,
have to sell.
divorce, death, and whatever else. Yeah.
Yeah, but it's like the whole, you just got relocated. Your job just moved you. So now you have to move. Okay, if you have to, then rates, none of that shit matters because you have to, right? But if you're not facing one of those, if it's just a move up, like, and this is where I think the marginal comes in. What I started imagining was, I remember buying my first condo, like back in 1997. Do you know what I mean? Like, we bought a tiny little 1-bedroom condo because it was just me. And at the time, my fiance, my wife, right? We didn't have, and we had a baby, right? And moving from that 1-bedroom condo to a 3-bedroom starter home was a gigantic change, like lifestyle change wise, right? It really is a huge change. And then we had a second kid, and it wasn't like, okay, you can accommodate that. And what I thought was, if we had a third child in a 3-bedroom apartment, in a 3-bedroom starter home, right? Would we have moved up? And the answer is, that's when we're a marginal buyer.
Right. That's what you're saying, right? It's like
In other words, like,
you don't have to, but if everything aligned, you could
right.
do it. Right.
If the price is right, et cetera, it's like, okay, you know what, moving up to a 4-bedroom house would make life better for us. Right.
Right.
But what's the cost? What's the, and to me, that's the marginal buyer, right?
Right.
The marginal seller as well, because then obviously you have to sell your starter home in order to move up. And I think that group is completely decimated because of interest rates. And I think if this interest rate lock-in is at work anywhere, it's with that group, right? And I don't know who they are, right?
Yeah. But I mean, that's something we've talked about already. I mean, we've been talking about how the macro market has affected those, as you call them, marginal buyers and sellers, right? Where the 4Ds are going to, you have to do that. But,
correct.
But we were both surprised by how much the macro market has an effect on that, right? And so far, what are they predicting what are they predicting the I mean, I think I'm going to lose this bet because I think you were really pessimistic at the beginning of the year. What are they predicting the total sales now based upon? It's in the 4s, right? It's in the 4s.
The latest I saw was 4.2.
Okay, so if we're talking about a normal market is a 5.5, that sound right?
Yeah, something like that. So, yeah, historically.
So you can almost kind of then do the math there and say, okay, well, hell, that's 1 point,
it's a 20 to 25% decline.
Yeah, right, and which is about the macro market, right? That are
correct.
That tied to that. So that's an interesting kind of thing to think about going forward of like what that swing can be. I'm sure all the economists already think about this and know this.
Of course.
But yeah, that's crazy. And then But then the crazier part is, forget the lock-in, which we get, but these other factors, what we just talked about, if you're in Orlando, I forget which one it was, but
it was like Tampa. I want to say it was like Tampa. It was like 50%. Yeah.
A 50% increase in the price of your home. Now you got the double whammy, right? Because now it's like, okay, let's say that I have to move, or even though on the marginal buyer, it's like, well, Jesus, you made that much there, but you're going to have to give it all back away somebody else, right?
That's right.
And then just nuts.
Yeah, and then some.
It was Miami. Miami was 43%.
Yeah.
I mean, Tampa was 55. So you're right. Yeah, that was the biggest jump here. But even a market like, local where I know, Riverside, right? That was still up like 18%. I mean, I'm thinking like Riverside, I'm sorry, 38%. I mean, what the hell?
And the thing is, I think people are looking at the year-over-year change and saying, oh, home prices have dropped, right? Because they're looking at like 7% declines in Las Vegas and things like that. Like, oh, it's dropped from the peak. And I'm like, fuck the peak, dude. Look at from 2019. Right?
Yeah.
And again, my thing is like, but no one's made that much money. Nobody got raises. Nobody got 50% raises in 2 years. Right?
Yeah.
So housing affordability is utter crap because of it. But here's the thing. I think we have been seeing this. We've been hearing this. I think Mike Simonson, for example, a couple weeks ago put out a tweet saying it looks like the consumer has adjusted to the new mortgage rates. Like we're starting to see more like mortgage applications and things like that, right? Purchase mortgage. I'm like, yeah, that's true. I'm willing to bet that those are first-time buyers.
Right.
Because, again, to go back to
they
that.
They can't wait any longer, right? So it's like, okay, this is the new normal, blah, blah, blah.
Not only that, but like I said, the utility, right? You know, there's like the benefit you get. Going from renting to owning, it's a world of difference, right? It's a huge, huge jump.
Yeah.
Going from a small 1-bedroom condo to a house, a detached house, it's a big jump.
Yeah.
Right. So I think those people are willing to do that. And like, whatever, 7%, and I have a 3% rate, who cares? I'm going to go from a tiny studio condo that I was sharing with my wife to, we're going to move into a 3-bedroom house because we're going to have a kid. Right.
Yeah.
That's a dramatic change. Going from a 3-bedroom starter home to a 4-bedroom move-up home, I mean, it's a change, right? But it's not a dramatic change.
Yeah. Do you want to swallow that bill for that?
Correct.
Change, correct. For that little of a change,
correct.
Right? Yeah.
Correct. And that's the issue, right? So this rate thing is coming in because, again, I think we still get like postcards and emails from random, like, hey, rates, whatever. And did you know your home value went up 30% or 40%, whatever? So da-da-da. And we're looking at it like, but based on these rates, right, we would end up settling for a crappier house. Like if we were to sell our house right now and capture our gains, and then we move, we'd have to move to a smaller, crappier house at the same payment. Why would we do that? No one's going to do that. Right?
Well, I mean, I think that's why we're seeing, and it just goes back to our kind of conversation with Keith, was the new home market, right? Because they can play with that stuff. That's why, they're doing so well there, right? That's perfect for the situation you talk about, right? Where if I'm going to go into an existing home, you're going to have to cut. That's a thing you got to deal with as far as interest rate. But the builders will play with that thing to kind of get you in that inventory.
That's right.
Yeah.
And then the other area where this really, really hurts are all the retirees. Right? The old people who normally would have been like, okay, well, the kids have moved out. And this is where even the 4Ds are no longer applying, right? Because it used to be the D, the diploma piece, you're now an empty nester, right? And now this 4-bedroom house is too big for you. You know what? Let's sell. Let's capture some of the gains. We'll move into a smaller thing that's appropriate for, 2 people, right? Etc. I think now what's happening is they're looking at like, but we have a 3% rate. Like, why would we sell and then buy a smaller, crappier place at a much higher, like, no, we'll just keep it. We've been living here 10 years anyway. We love our home. We'll just keep it. We'll just onto it. Maybe we'll pass it on to our kids or something, but there's no reason to leave. So if that's the scenario, the question is, how do you unlock the inventory?
Yeah, I mean, and then that's the question for sure. Then the other question is like, what is going to change? I mean, what makes this thing change in the next year? Again, if we feel that the interest rates are not going to go back down to 4%, if we feel that there's just not going to be a bunch of houses coming on the market because of foreclosure, we're not definitely in a 2008 situation.
Nope.
Right?
Nope.
I mean, what actually changes here to make things, because this is affecting everybody. This industry, if you have less transaction, this affects the associations, MLSs, vendors, agents, brokers, franchisors, termite inspectors, builders. I mean, everybody, right? So I just that's the kind of really. That's a tough question to ask. It's like how, I mean, what, it's not, I don't see us a way out of this. There's no magic bullet here. And like, what does that mean? Is this a new normal? Right. And is home ownership now just for the, the 1%ers, as you call, as we talked about before?
Pretty much. pretty much,
or
right?
or
So
just open up, more. There is now going to be, I guess, with the COVID stuff, there was this whole thing of like, people from San Francisco moving to Sacramento, but now is it going to be
sure.
more of a, I'm moving from California to Nebraska, loving Nebraska because our producers are from Nebraska, but I mean, to buy a home, right? I mean, it's just, it's that type of thing. These flyover states become the new places to go to kind of buy a starter home, right?
Yeah. No, that's already happened, right? That's already happening. The issue is your job, right? So yeah, it made sense during the COVID thing, right? When all of a sudden it's like, okay, everybody work from home. Cool. I'm making San Francisco wages, but I can move to Oklahoma. Like, yeah, I mean, that makes all sense in the world. But as we've discussed, like a number of companies are starting to backpedal from that.
And not everybody has those kind of jobs, right? I mean,
not everybody has those kind of jobs, right? Or you just straight up go, hey, you know what? We're hurting, so we're going to lay off. Okay, now what? Right. So yeah, I think this is kind of the new normal. I think we're headed now. Here's where I differ. I'm like, yeah, it is the new normal, foreseeably, predictably. Thing I don't get though, I don't believe this is not sustainable. Right? Like just as a country, we are not a country that's just premised upon the wealthy elites own everything and then everybody else just become tenant farmers. Like that's just not in our nature. Like that's Europe, right? Europe has been that way since like the Middle Ages. Asia's been that way since whatever time of Genghis Khan. That's not America, right? So I don't know that we would tolerate that. And then you have to go, okay, what happens as a result of that? So in other words, let's say we're at like 4 million homes sold this year, right? Let's say interest rates are 8% going forward. But homes are still increasing at 10% a year, whatever, like whatever it is. So we just have like entire generations of young people like, I can't ever buy a house. I don't think Americans will stand for that. I just don't. And we have an election year coming up. So what are we going to see? Are we going to see crazy rent control? Like, what are we going to, like, we're going to see something, right?
Yeah. I mean,
we're going to see something
is it,
to bring
I
it
don't
all
want
down.
this to happen, but is it like 40-year mortgages? Is it, some other kind of other financial,
it's already
mechanisms to make that kind of stuff happen? I mean,
90-year mortgage, like, okay, like, are we going to tolerate that? Right.
Well, I know they have some of that kind of stuff in Japan, right? Where it's a multi-generational mortgage, right?
No, I think Japan is going the other direction. Like Japan. So the thing about Japan is their property prices have been flat for about 20 years, I think, right? Because they have these various policies are like, no, you're not expected to get rich off your home, right? So I don't know what's going to happen. I'm just saying, like, if this is the new normal, it's not going to be the new normal for long, right? And
I mean, it does smell like an opportunity. I mean, and we've talked about this before. There was a great talk about this that I think it was Alex Rampel made from Idris, Horowitz, where how home ownership in this country has basically been an all in, all out situation where either like 100% on the freaking tab for it, or you have zero equity or any care, like you're renter or homeowner, right? If you're owning it, like if something happens, it's all on you. If you're renting, it's all on the landlord. And that, is there a financial product or mechanism where we can take that the banks and the consumer are aligned, right? Where
co-ownership,
co-ownership, but like they both partake in the equity event that is going to happen later on. So if I'm going to do a mortgage with, let's say, Goldman Sachs, right? I'm going to buy a $1 million home. I'm going to only pay 500,000. I'm on the hook for 500,000. They're on the hook for the other 500, and whatever that works out to. But when it's sold, I get half of what that is. It smells like there's, and then what 20 years later is a financial product like that. How does that wreck our economy? Freaking 20 years from now, right? That's the fear there. there's got to be some innovative ways of getting out of this for sure.
I'm actually unsure what that's going to be. Because now, having said that, I do think about like the banking crisis that we've had this year, right? Like the collapse of Silicon Valley Bank and all these other things. We know for a fact that a lot of it was connected to the MBS, mortgage-backed securities that they were holding, completely dropping in value because rates went crazy.
Well, they went crazy in a very quick manner.
Correct, right.
Yeah.
Correct. So a lot of these guys were holding bonds, that were like paying 2%. And all of a sudden rates are like 7%. And they're like, well, the bonds are paying 2% isn't worth the paper it's written on, So like, but if they held these like the equity instruments, that would be different, right? If they didn't hold bonds like that, if they held this whatever thing is 50% ownership in Greg's house, and Greg's house went up 40% in value, so therefore the value of this security went up 40%.
Yeah.
So who knows? Maybe that's how you stabilize the banking system.
It would be not a mortgage-backed security, but it would be like a mortgage-backed equity security.
It would be like an equity-backed security of some kind, right?
Equity-backed security, exactly.
Yeah, is that something that's possible? I don't know.
Maybe we should open up a freaking house here and sell this. One of those.
I'm pretty sure there are a whole bunch of very well-funded companies that are trying to make something like this happen.
Yeah.
I imagine they're probably running into all sorts of regulations that make that very, very hard. But yeah, I just want to talk about like this whole rate lock thing. The issue is the marginal buyer. And for real estate, the issue is the marginal buyer is the marginal seller. And to your point, like, new home construction is reaping the benefits of that. There's some real negatives to new construction though, right? And it's something that I've brought up in the past and it just doesn't get addressed, which is the thing about new construction is that it's brand new. So it's nowhere near anywhere you want to be typically, right? So take like Houston, for example, which is where I have the most experience. New construction in Houston right now is like 45 minutes outside the city, right? So what happens if you want to live closer to the stadium or closer to downtown? New construction is not an option.
Well, I mean, but it's a better option than moving to Nebraska. And that's if that's the other option of like getting into a house you can afford. I mean, it's not ideal, but I mean, at least it's better than having to move out of state, right? So sure. I mean, there's got to be sacrifices that are made there. Like, I mean, and again, that might be but I think your first condo, it wasn't where you wanted to be.
Oh, it was actually.
Okay, but really a lot of people, their first purchase isn't the ideal home. It's their starter home. It's okay, we're going to get. Yeah. So that's not that problem. The problem you laid out of like the new homes are somewhere else. That's not a new thing. I mean, people have to sacrifice when they. But for the marginal buyer, I think I do get your point where in a marginal thing, you want to upgrade to something that's you kind of compromised, and now you reap the benefits and want to move to something where you're not compromising as much and get really what you wanted to begin with. But
that's right.
I think you're exactly right on that. That's sure. Right.
So, I mean, from a broker agent standpoint, I think when you're talking to like a seller, I mean, I think it probably pays to think about that marginal utility piece. Notice like, okay, I'm talking to this homeowner, they're a young family, they have 2 kids in a 3-bedroom house. Okay, if they have a 3rd kid, that's going to be real tight, right? But the trade-off isn't like if you just go and say, hey, you have all this equity, you should upgrade to a bigger house with a swimming pool. Like, I don't know if that's going to play ball as much as they could just have their kids, room together. They could get bunk beds. Like whatever you're offering has to be better than that, right? You know what I mean? Like it's almost that type of thing. And I'm sure the great agents out there are doing that. They're thinking about their clients and say, okay, what's your life situation? Is this the right time? Or quite frankly, from a fiduciary standpoint, you should be like, you know what? You shouldn't. Just get a bunk bed for now, right? Just get a bunk bed or rent it out and then move to Kansas. I mean, like whatever, Yeah,
but I mean, I've seen some of those agent videos, let's say 3 months ago, 4 months ago, like, you know what? If, and these are also the financial gurus. Like, if you're thinking about buying a used car, I would wait. Also, a house, if you really don't have to move, wait 12 months.
Yeah.
But again, now it's like, what's going to change in 12 months?
Right. It's only going to get worse.
Here's what could change is you could buy a house now and it could be up 38% next year. That could change.
That's right.
But I mean, as far as the rates going down or the price of homes going down, no, that's not going to change. No. So there is a narrative there to say it is a good time to buy. Right? I mean, everybody can spend these things any way they want.
So no, but if it's a good time to buy, it's not a good time to sell.
Yeah.
Right. I mean, I'm sorry, like the whole, it's a great time to buy and sell.
You had a situation here in California for a while where you did have a perfect storm where the home prices were way up. You could sell it, and here's the other part is that if they stayed, they'd be even way more up. But but the problem is back then you could move from California to, let's say, Arizona.
Sure.
And basically go into a home in Arizona where you didn't owe anything and had some money on the side. Right? So
sure, geographic arbitrage, right?
But that kind of stuff is not happening any longer. Those kind of deals are
no, I think they still exist, right? I think they still exist, but to your point, you really have to do geographic arbitrage then. So you'd have to sell a place in like Newport Beach, for like $4 million, and then move to Nebraska.
Yeah.
Right. And there's some argument to be made that depending on your lifestyle, that might make a ton of sense. But most people who live in Newport Beach, I imagine, aren't going to enjoy living in Nebraska. You know what I mean? Like, I just don't think their lifestyle works.
Right. But I mean, there's something there where, and we all see this, like when we're like traveling, it's like, oh my God, look at that home. Look at the land they got. And, especially coming from Southern California, it's crazy, right? I mean, imagine, an agent whose niche is, I'm going to okay, you may not think Idaho, you may not think Arizona, you might not think Nebraska's whatever, but I'm going to find these premium homes with a lot of land and everything else and type up the lifestyle thing there. And then I'm going to market to Huntington Beach or Irvine people saying, listen, I know you got it great here, right? But if you can work from home, here are 10 homes in 10 different markets that I know you haven't considered, but take a look at this.
Yeah.
Here's the school ratings. Here's the, whatever. And like make people go, fuck man, I can move there. I don't have a mortgage anymore. Right. And, there's just that list of benefits they put like, okay, here's what you are now. Here's what you could be.
Yeah.
It snows. It gets colder. Right. There's not, you can't, there's not as, there's, a third less to Starbucks.
Yeah.
Yeah.
Yeah. Yeah.
But imagine right now you didn't have to pay a mortgage, what your life would be. You could go on vacation. You could do, there's this lifestyle kind of marketing that agents could kind of drip into, right? That I think would be really interesting to see.
That would be interesting. I wonder if that could apply. So here's what I'm wondering. I wonder if you could do that for entire companies. Right. So as someone who's been a company owner, right? Imagine it's not just you moving to Idaho. What if it's like, hey, are you a business owner? Move the entire business along with all your people to this wherever, right? Because now you get rid of the job issue, right? It's not if you can work from home. It's like, you know what? No, I have an auto welding shop or some kind. All right, move the entire operation to Kansas City because this neighborhood needs an auto welding shop. And now your 4 employees and your entire business can move. I wonder if something like that would be, you know what, if you're listening to this and maybe go reach out to like some commercial broker that and have a conversation like, hey.
Well, it goes back to your kind of like, and this is a little bit a stretch, but I don't think that much, is like brokerages or agents that really leverage what they are, that they know that a certain brand of people are into. Like the guys that you said was like into home protection, guns and stuff. And that was his part of his whole thing was like, that was his persona and he attracted that kind of people. Who just had a post on this was Brian Barrero from 1000 Watt of like, imagine if Taylor Swift said, I'm recommending real estate agents and to tap into that fan base, right? I mean, that's a little bit off the thing, but I mean, if you really leveraged lifestyle, this is what your life is now, and this is what your life is after that. And yeah, there's some sacrifices, but the fucking upside are crazy.
Upside are nuts. All right, so I got this, and we only have 4 minutes left, so I want to put this out there as an idea for our listeners. Okay, here's the idea: focus specifically on medical practices.
Okay.
All right. So what you do is, as a residential agent, you go talk to like the doctor, right? And then you bring a commercial buddy along and says, okay, you have this type of medical practice with, this many, your whatever patients, this, that, or the other thing. You could replicate this in this other city, right? Where there's a lack of your particular specialty or whatever. And home prices are a third of what they are here. So if you sell all of your, blah, 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 sell here and then move to this other city, you and your entire staff, all your nurses, all your people, improve your life. Office rent is going to be a third, and it will take you this much time to, bring your practice back up. Move the entire thing. And I say medical practice specifically because that's the one thing that I don't care. Like every town, every city in America, there's never like, oh, we have too many doctors. Oh, we have too much healthcare. Like nobody's saying that. Everyone's like, we have too few. The wait times are too long or whatever. So I want to hear more about this. Like I want to hear somebody do this and like let us know like would that work.
Interesting. Yeah, for sure.
Anyway, all right, we got to wrap. So wonderful to have you back. This inside the United States.
I know. Good Lord.
Greatest country,
God. It is.
Actually, so let's leave with this. Now that you've actually spent so much time in the UK, could you see yourself living in the UK?
No. I mean, I like to visit there. It'd be nice to have, not live there, no, but, to visit, sure.
Because America.
Well, yeah, but I mean, listen, I live in Southern California. This is where people come to vacation. I live in a vacation. People come to vacation.
Yeah,
I mean,
that's true.
I was born in Seattle and grew up a little bit in Seattle. And, that's what London reminds me of is rain and big city. And I love that kind of stuff. But yeah, I like it here in Huntington Beach.
All right. Well, with that, thanks everybody for listening to this ramble. And we will see you next time.
Thanks.
Listen, content is everything. Two Brothers Creative makes it look easy. Right now, business owners really only have two options. The first option is hire a big firm. Now, this big firm's going to come in, make you think that they invented all the algorithms, and start charging you thousands of dollars every month. You don't want to do that. Second option is to do it yourself. Well, that means you got to learn SEO, SEM, copywriting, marketing techniques on the web. You should be really focusing on your own product. But now there's a third option. It's called Content in a Box. Give Two Brothers Creative 30 minutes a week and they'll handle everything. Plus, they'll show you how to bring it in-house later on. They'll rebuild your marketing foundation and give you tools and techniques and a new marketing playbook that'll actually produce real results and help you grow your business. Two Brothers Creative will give you the confidence and know-how to tell the SEOs and SEMs and all those other acronyms to get fucked. You're in control now. Get started today at thecontentbox.com.